Urgent alert, silver price breaking right now, February 6, 2026. $85, and refusing to break lower after the 41% slaughter from $122 straight down to $72. Welcome back to the front lines. This is your no-holds-barred update on the silver war the mainstream is terrified to cover. If you thought the bounce was dead, think again. We are going deep into the 3 signals they do not want you to see. Stay with me. This could be the moment everything flips. Subscribe now and hit the bell. We are dropping these bombs every single day while the market is this alive. Let us tear it open. First, the battlefield recap, so you see the full picture. Silver did not climb. It detonated. From $30 early 2025 to $122 late January 2026, over 300% in 13 months. Gold smashed through $5,595 all-time high. The rally had 3 massive engines. Central banks hoarding to escape the dollar, industrial demand exploding in solar panels, electric vehicles, 5G towers, semiconductors, defense systems, and a final speculative frenzy. Retail, funds, algorithms all piling in. Silver alone jumped over 50% in January. Then the trapdoor opened wide. Margin requirements spiked overnight. Leveraged positions wiped out in minutes. Algorithms turned cannibal and sold into each other. 37% single-day plunge, the worst since the Hunt brothers bloodbath in 1980. 41% total wipeout to $72. Panic flooded every forum, every headline screamed bubble burst. Then silence. Then the bounce. 18% straight off the lows in just days. $85 now holding with buyers defending it hard. Dead cat bounces do not hold like this. This one is not fading. So who is actually buying? Here are the 3 signals. The mainstream is either too scared or too bought to say out loud. Signal 1, the east-west price chasm is not closing. It is exploding into a canyon. While Western paper contracts were being obliterated down to $72. Physical buyers in Shanghai were calmly paying 25 to 30% higher for the exact same metal. Same purity, same bars, 2 completely different valuations in real time. Even when Shanghai futures slammed into limit-on and trading froze to prevent total carnage, their floor price converted to dollars was still $12 to $18 above, where Western futures were freely imploding. That is not retail panic selling. That is deep-pocket institutional accumulation happening at scale. They were not running. They were loading up, calmly, deliberately. Signal to one of the largest Western precious metals trading houses just made a move that should make every trader sit up straight. They did not double down in New York. They did not build bigger in London. They relocated a major part of their entire precious metals operation to Asia, Singapore specifically. Traders, analysts, technology infrastructure. All moved across the planet. This is not a branch office upgrade. This is a tectonic shift. Institutions do not spend tens of millions relocating their core business on a quarterly hunch. They do it when their smartest people have run the numbers and concluded the future. Center of gravity is no longer in the West. Asia is where the physical demand is on fire, where central banks are quietly building reserves year after year, where real premiums on actual metal are not theory, they are fact. This move is not rumor. This is signal. Signal 3. The U.S. critical minerals ministerial fallout is not some boring policy footnote. It is a 5-alarm fire. Delegations from allied nations, hosted by Secretary Rubio, stated mission, strengthen and diversify critical mineral supply chains. Translation, we are exposed. We are dependent on chains we do not control. We are going to fix this before it becomes a national security disaster. And silver is not on the sidelines. It is front and center. Why? Because silver is not sitting in vaults. It is being consumed, burned up forever, at record speed. 650 million ounces disappeared into industrial use last year alone. More than half of global production, gone. Solar panels need silver paste in every single cell to convert sunlight efficiently. Electric vehicles need it in batteries, contacts, wiring. 5G networks need it for high-frequency performance. Semiconductors, defense radar, missile guidance, X-ray machines, all require silver's unmatched conductivity. No viable substitute exists at scale and cost right now. and the world has been in a supply deficit for years. We mine less than we use. Stockpiles are draining. New primary silver mines take 8 to 12 years to bring online, permitting environmental reviews, funding, infrastructure. It is slow. Most silver is byproduct from copper and zinc. Copper mines do not care how high silver goes, they follow copper cycles. That is the structural trap governments are finally waking up to. So what could realistically come out of that meeting? Stockpiling programs like the Strategic Petroleum Reserve, but for silver, bilateral supply deals with friendly producers, fast-tracked domestic mining incentives, export controls on foreign buyers. Official strategic designation for silver. These are not small tweaks. These are the exact moves nations make when they decide a resource is too critical to leave to traders. China already did it with rare earths. Now the US is moving. Put these three signals together. Paper silver crashed 41%. Physical barely flinched. Eastern buyers paid 25 to 30% premiums the whole time. A top Western institution moved its operation to Asia. The US government held an emergency ministerial on critical minerals supply chains the week after the crash. This is not coincidence. This is convergence. Wealth did not vanish in the crash. It transferred from panicked leveraged traders who sold at the bottom to patient strategic accumulators who bought the fear. This is not the death of silver. This is the purge before the next leg higher. The 1970s gold market is the clearest blueprint. Gold ran hard to over $200. Euphoria everywhere. Then 50% plus crash. Headlines wrote the obituary. Retail sold at the lows in fear. Then gold went to $850, 400% plus from the bottom. The crash did not kill the trend. It killed the weak hands. Same setup here. Silver from $30 to $122. Crashed 41% to $72. Bounced 18% to $85 in holding. That is not a dying asset. That is a shakeout. Real industrial demand has not disappeared. Solar cannot stop. EVs cannot stop. Defense cannot stop. Some large end users are already locking up direct mine supply, bypassing exchanges entirely. When corporations go straight to producers instead of trusting open markets, that is not optimism. That is fear of future shortages. So here is what I am tracking every hour. Today's follow-up statements from the U.S. Critical Minerals Ministerial. Any hint of stockpiling, silver designation, or new supply deals. Shanghai Premium, if it stays above 20% while prices recover. Physical is still king. Price action, if $85 holds and we grind toward $90 to $100, the purge is complete. Dollar moves or Fed hints, any weakness could ignite the next leg. This is not financial advice. Markets are brutal. Do your own research. Talk to professionals. Risk only what you can afford to lose. But from where I stand, looking at these charts and data every single day, this does not feel like the end. It feels like the beginning of the real move. Drop your raw take in the comments right now. Is $85 the floor? Or are we about to get trapped again? Did the US meeting shift your view? Are you buying more on this bounce? I read every comment. The sharpest calls often come from you. If this cut through the noise for you, share it with one person who needs to hear it. And if you are not subscribed yet, hit that button now. We are tracking this story every single day while it is moving fast. This is the hidden side of the economy. I will see you in the next update. Thank you for watching. Stay sharp. Stay ready.